Good morning, everybody. Thank you for joining us here on this first Monday of 2026. My name is John LaMaster. I'm a Life Sales Director here at IAMS. I'm excited to be joined by Krista Johnson over at our partners there. It's Allianz to go over their IUL product. We'll also dive into their illustration system and take a dive then into their InSight tool, which I think is a powerful tool to help illustrate and have conversations around index universal life products and where they Allianz specifically shines there. So to get things started off here, have a few intro slides for those of you that might be new or need a refresher on our value proposition here at Insurance Agency Marketing Services and why thousands of the agents choose to work with us here. So first off, we have our new producer builders here, which you can see here on the screen. We have various levels here for the new producer builders. So this is in effect for your first 180 days of contracting new initial contract with us here at IAMS, varying from at that $100,000 level, you can get $750 cash back, an iPad, all the way up then to $1 million of production. This is all based off of FIA business. There are different factors then for life insurance premiums, but you can see here on the screen various marketing packages, annuity appointments, all that sorts of good stuff. So if you have any questions on our new producer builders, maybe what your current balance is if you're new to us, or how this can help boost your practice as we head into 2026, reach out to one of the sales directors here. Best way to get in contact with us is via phone. Our number is 800-255-5055. Our next incentive in Business Builder is our referred producer program, which is essentially, think of it as a way of saying thank you to referring any new agent to us that is not going to consider to be in your hierarchy or your agency. So we will cut you a check for $50 once that referral gets contracted and active with us here at IAMS. And then on a quarterly basis, we'll pay you out an override on any production that they have go paid. You can see the various factors there on those premiums there, from Life Target to FIA to single premium life and MIGA business. Secondly, we have our marketing reimbursement program. Think of this as a cost sharing for any marketing and that you're doing either through seminars, your own marketing through Facebook campaigns, purchasing leads, whatever the case may be. So once again, it's a cost sharing program. So we'll pay you $100 in marketing reimbursement per $100,000 of FIA production that goes paid. On the life side, we'll pay you $200 per $10,000 of target premium paid, and $200 per $100,000 of single premium life business that goes paid. So if you have any questions, once again, here on our business builders, either the referred producer program or marketing reimbursement, reach out to a sales director on the life or annuity side of things. Next, we have our back office support. So I feel like this is one of the main reasons that independent agents choose to work with us here at IAMS. When Charles Sr. founded IAMS here 35 plus years ago, he realized that a lot of IMOs forget that you guys are essentially independent contractors. You get to choose who you work with, and sometimes IMOs forget that. So we really pride ourselves on the back office support that we provide to you, either on the new business side of things for life and annuities, contracting, also then the sales aspect of working with a sales director here. So if you're not familiar with how we can support your practice or agencies here at IAMS, reach out to a sales director and get a call set up to walk through that. Once you are contracted with us here at IAMS, you'll get access to our agent portal, IAMS website, which is iamsinc.com. If you're not contracted with us, so go ahead and check that website out. You'll have access to a handful of things, but once contracted, you'll have access to excellent sales tools. It's accessible 24/7. One thing I always like to point out is the sales resource library. There's probably 1,000 pieces of content inside of that sales resource library. So you could spend a couple days going through all of that information, from fact finders, client presentations, tax guides, multiple different aspects there to help support your practice with during your conversations there with your clients and prospects. Also have term quoter tools, online forms, industry links. So ton of good stuff there. If you have any questions or have not gotten signed up for our agent website, reach out to your sales director at 800-255-5055. Another way that we support you is on the technology side of things. As we all are aware, majority of the industry is heading towards e-applications. Some of the carriers are going to e-app only for the good, bad, or ugly. Personally, I think it's a good thing. There's a ton of data out there from the carriers that show, the aspects of quality of business while using an e-application versus a paper application are significantly higher. So you can get business through suitability, underwriting, all that sort of fun stuff a heck of a lot quicker when using an e-app. Luma and Firelight are generally going to be more focused for those annuity products. All of our life insurance products flow through iPipeline, and Sunfire is going to be mostly for those senior health products and supplementary products. So any questions on those, once again, you'll get the theme here. Reach out to a sales director, somebody on our support staff that can help you out here with your e-app solutions. Next aspect here of ways that we can support your guys' practice here at IAMS is our creative services team. So Jacob and his team do a ton of different work on that side of the business. So if it's either a website redesign, website build from scratch, if it's digital marketing solutions with Facebook business profiles, Facebook campaigns, email campaigns, all the way down to helping you create a logo redesign, any stationary stuff that you'd like to revisit as we head here into 2026, they can help out with every aspect of that. So reach out to a sales director. We'll be able to get you in contact with Jacob and his team. Once again, our best way to be contacted is via phone at 800-255-5055. When speaking of our creative services, if you haven't had your complimentary marketing analysis completed by one of our sales directors or the sales director that you work with, I would highly suggest getting that done here. It's a great time as we head into 2026. So think of this as no different than a fact finder the first time you're meeting with a new prospect. Take some time to get to know your practice, what your goals are here for the year, how 2025 ended up for you, how we can bridge the gap to achieve and scale your practice. We'll come up with a customary solution. It's not going to be one size fits all. There's going to be various different recommendations that we give, either if it's a website redesign, social media redesign, various different marketing solutions and vendors to work with to get you in front of new prospects to achieve your goals. So if you'd like to have a marketing analysis set up, reach out to one of the sales directors on the life or annuity teams. Next year, we have our RIA, which is IAMS Wealth Management. Created IAMS Wealth Management back in 2016 when all the new DOL rulings and changes were coming out. We saw the need to help out our, mostly independent insurance agents bridge that gap and get into advisory business. So a couple key points here. If you're not familiar with IAMS Wealth Management or working with an RIA, it's a great way to increase your revenue, improve client relationships and strengthen your current relationships. My thought always is if you can have more wallet share with your clients and households, less likely they are to talk to any other advisors or agents out in the business and less likelihood of them moving. So if you are looking for a new RIA or have just recently passed your 65 or looking at taking your Series 65, reach out to one of the sales directors. We can get you introduced to Charles, Duncan, Chad, the whole team over there at IAMS Wealth Management. Next year, as we head into 2026, is our life and annuity academies. We'll probably host at least 4 to 5 of these throughout the year. If you're new to IAMS or not familiar how these academies work, this is a great way to spend a couple days inside working on your practice. Generally, these are going to be hosted at our home office. We're going to work in conjunction with a couple different carriers. In total, you'll hear from about 25 different keynote speakers over a 2-day time frame. So we cram a lot of content. It's good content into a short amount of time. So you hear from multi-million-dollar keynote speakers, carriers on product insight, market insight, all that kind of stuff. Also is a great way to network with other producers like yourselves out there in the field. We should be announcing our academy schedule here within the next couple of months. Generally, that first one is the end of spring or start of Q2, so be on the lookout for that. And finally, here we have a couple of our social media pages. Make sure you're following us and liking us on Facebook, LinkedIn, our IAMS website, then our telephone number down there. Also want to mention our YouTube page, where a majority of our webinars like this will be uploaded, so you can watch those on demand. If you have a topic that you're interested in, I highly suggest going to check out our YouTube page to watch any of those at your own leisure. With that, I'm going to hand things off to Krista. First off, I'm going to launch a poll here. I'm curious to see, I know we're going to be talking a lot about Allianz specifically in their IUL business. I am curious to see how many people right now are offering IUL solutions to their clients, either with Allianz or with the other handful of carriers that are strong in the marketplace. So I'm going to give a couple seconds here to allow everybody an opportunity to give their feedback there. All righty, thank you all for sharing there. And with that, I'm going to hand things over to Krista. Krista, what's your title essentially over there at Allianz? Everybody, it's wholesaler, regional vice president, all that kind of stuff. So I just wanted to first off, thank you for jumping in with us. If you'd like to introduce yourself, give us a little background of yourself, and you're going to be jumping into why Allianz, obviously a large carrier that I'm sure everybody's familiar with, but kind of where you guys fit in the marketplace, and we'll talk about some of your guys' products.
Sure. Thank you so much. Can you hear me okay?
I gotcha.
Okay, sounds good. Yes, my name is Krista Johnson. I am a Divisional Sales Director on the life insurance side of the business here at Allianz. I have been here for 21 years, so great company to work for. But yeah, my role is basically to work with you, the agents, advisors, the different FMOs and IMOs out there, and just really just tell our story, talk about our products, talk about the sales tools that we offer. And I'm excited to be here today. So happy New Year to everybody. First of all, I think we're the first carrier on your lineup, John. So I appreciate the opportunity.
Wanted to make sure we started the year off right.
Sounds good. Well, let's get this going. I'm going to share my screen here for just a minute. And, if there's any questions at all, John, I'm going to stop frequently throughout the presentation. And if you can enter anything in the chat, if anybody has any questions, certainly I'll be able to answer those live here during this webinar. And let me go ahead and share. And I do apologize. I do have a little bit of a cold. That's life in Minnesota and life during the winter here. But so if I mute myself out for a second, that just means I'm having a coughing attack. But all right. So I am. Can you see my screen right now?
I can, yes. It looks like the Allianz website there that you're logged into.
Allianz website, that's where I went to first. But yes, let me go ahead and throw myself into this presentation. What I wanted to do today is really just kind of introduce you to Allianz. I saw that poll, so thank you for doing that, John. Looks like there's a number of you that are already writing our product, which is great and fantastic. And for those of you who aren't, just a quick little introduction into who Allianz is. Our IUL product, just give some really, just some key highlights. So I'll kind of breeze through this presentation so that we can kind of get to the meat of what this presentation is about, which is about running our illustrations and linking them to a great sales tool called EnSight. EnSight is a way to bring your illustration to life digitally for your clients so that they can get a view of how that policy works, the accumulation value, the loans coming out of it during retirement or whatever they need that for, and just really bringing it to life, really, and lets you stand out in the marketplace, because right now, I would say only about maybe 20% of the agents that work with us are using this tool. So you want to differentiate yourself, differentiate your practice and how you're doing business with your clients. Give them some digital tools that they can look at, they can view it, they can share it with their friends, their family, and that might open up other opportunities for you as well. So first of all, let's just get into who Allianz is. and then a little bit about our product. First, before I start, it's really exciting right now to submit a case with us, because we do have our underwriting risk class upgrade program going on right now. It did start in July, so those of you who have written with us, hopefully you've experienced this upgrade. But what it is when you submit a policy, or when you submit an application to us, every single application is viewed as, going through the underwriting process. Some of them are going to get accelerated underwriting, some will go through traditional underwriting. But regardless, if your client is table 2 or better, they're going to get automatically upgraded to our best risk class, which is Preferred Plus. Now that's for non-tobacco users, right? In some cases I've recently worked on where they have gotten the upgrade is, I've seen many upgrades for build where that might have been just a standard risk class and they've gotten upgraded to Preferred Plus. I have had some with cancer histories, different types of cancer histories. They've been out of it for a while. They maybe would get a table 2 normally, or with other carriers, they'd be table rated, and they have actually gotten the Preferred Plus risk class as well. If you've got tobacco users and they qualify for standard tobacco, they would get upgraded to the preferred tobacco also. And what this is going to do for your clients is it's going to give them a lifetime discount on the cost of insurance. And, not only does it give them that discount, but what it's going to do in the policy is they might get a little bit higher death benefit amount than they would if they were only to get standard. And they're also going to have potentially better accumulation value, better loan distributions when they start taking loans as well. So this is a really good time. It started July 1st of 2025. We have it slated to go through the end of March. So March 31st is the end date for that. And then we'll reintroduce this occasionally as a promotion. We've had this going on for quite a while now. So if you haven't written with us, now is a good time to take advantage of this underwriting risk class upgrade program. So just wanted to give a quick commercial on that right now. So first of all, let's just talk about Allianz. Like I said, I've been with Allianz for 21 years, but we were founded in 1896. Currently, we have about 3.7 million contract owners. We are one of the largest insurers in the world, and one of the largest companies in the world as well. And you can see some of our stats here. We've got over 157,000 employees worldwide. We are in over 70 different countries. So no matter where you travel to or where your clients travel to, chances are they're going to see an Allianz building, billboard, a stadium, something like that. So I know I've been in many different countries and I'm always looking for those, and I see them all the time. Italy, Greece, Spain, and then also recently in Thailand as well. So pretty cool to see where Allianz is in the world. We are a strongly rated, highly rated company. So our reputation matters in this industry. And when you're, writing products and selling products to clients that are meant to last a lifetime, you want to make sure that you're doing it with a company that's got strong ratings and that's going to be around today and, 50, 100 years from now as well. So we are a very strongly rated company. We have one of the highest convex scores in the in our market space. So 96, I believe we are the highest ranked IUL carrier. There might be some other mutual companies that are a little bit higher, but anyway, 96 is really good. Again, strong company, and a company you'll want to do business with and that your clients will appreciate as well. A couple things I just wanted to point out that makes us different is, first of all, our dynamic hedging strategy. So most companies do what's called static hedging. They have to wait for enough premium to come in the doors before they can go out to an investment bank to purchase their hedges and buy and sell and trade. We do that in-house. The reason we're able to do that in-house is because we are not only just a life insurance company, we are an annuity company as well. And if you think about the size and scope of the premium and the policies that we offer, we bring in about $18 billion per year. 14 billion of that last year was for our indexed annuity business. And so we have enough premium coming in our door daily that we don't have to go to an investment bank to purchase our hedges and do all of our trading. We do that in-house at Allianz. We do that so well that our parent company in Germany, Allianz SE, came to us many years ago and said, hey, you're doing that so well, managing the dollars that are coming into Allianz here in the United States. Can you do that for us globally? And so we actually manage the global Allianz platform with many billions of dollars that we are working with every single day, trading on a global market space. But what we do in-house really is an advantage to us as an insurance carrier, because we are able to, really look at market volatility throughout the day. We're trading multiple times throughout the day. When dollars come into Allianz, it doesn't have to sit and wait in a fixed interest account until like the 15th of the month or whatever it might be. We actually get that premium in the door, and then it's indexed that same day. So one of the advantages of that is sweep dates. So if you're familiar with sweep dates, most other carriers, like I said, they use an investment bank. Once they have enough premium collected, they'll go out to that investment bank. It might be on the 15th of the month or the third Friday of the month or whatever it might be. And while that premium is in-house, it does sit in a fixed interest account. And then they have to pay this investment advisor or this investment bank to actually go out and purchase their hedges. We're able to do that every single day. So we don't have a sweep date where that money has to sit and wait. It's actually indexed right away. And one of the way that a client would see this happening is that when they receive an annual statement with Allianz, it's going to have all of their charges that are coming out on a monthly basis throughout the year. And it's also going to have the credit at the end of the year if there was an index positive gain. So there would be a credit as well. With other carriers, what they're going to see is they're going to see all the charges coming out of their statement, but they might not have a credit yet. And so it just keeps, the next year they'll get the charges again, and it'll show the credit from the previous year. Now, carriers have gotten really smart, and they send out a postcard, or they send out an email reminder saying, hey, don't forget to go look at your policy on the 15th of the month, because now that credit is applied. I'm not trying to bash any other carrier. I'm just saying how we do it differently. And the experience of getting an annual statement with your clients is going to be a little bit smoother. Maybe one less phone call to you at the end of the year asking about, why do I see all these charges but no credits? That does not happen with Allianz. And that's one of the advantages of us doing our own in-house dynamic hedging. Some of the other advantages is our index innovation. Allianz is known for being an innovator in the marketplace. These are some of the things that we've introduced since I started with Allianz in 2004. So I've seen the progression of the different things that we've introduced into the market. And most of these items have been replicated. A lot of times at other carriers, they'll wait and see what Allianz brings out, and then they'll quickly try to replicate that and add it to their policies as well. Since 2019, we have not had any replication in the marketplace, and a lot of that reasoning is because we can do our own in-house dynamic hedging, and most other carriers or no other carriers do that in-house for themselves. So we were able to launch what's called the index lock. And then the features after that, the auto lock and auto renew, those are part of the index lock feature, which I'm going to talk about and just give you a quick highlight of what that is. And then we've also introduced, in 2024, we did introduce a couple new index allocation options as well, and the lower lock threshold. So again, I'll talk about the index lock here in just a moment. This is our compliance side. So our product is called the Allianz Life Accumulator. So it is an accumulation focused IUL. And you can see from this slide as well, there's many different products over the spectrum of the IUL industry. There's going to be protection focused products that are going to have maybe some more guarantees. Maybe they have some more living benefits. They might not have as many index allocation options, maybe lower interest rate, but a little bit more guarantees. And then you've got all the way on the other end of the spectrum, the accumulation focused products. Maybe they're a bit leaner on the living benefits, so they're a little bit more lean on the living benefits, but where they excel is with accumulation. So maybe there's going to be different allocation options available, different features attached to the product, and just maybe a little bit more flexibility in how you get your loans and distributions out of the product as well. And that is completely, we are completely on that accumulation focus side with this product, as you can tell from the name. I'm sure you could figure that out. Okay, so target market, obviously those who need death benefit coverage. So that's first and foremost. It is a life insurance product, but Henry's, high earners, not rich yet, those who are, maybe they're young professionals starting a business, just got out of school, they might have a new mortgage, they might be getting married, but they have some money put aside, or maybe they're making enough money that they want to start looking towards the retirement or start planning for that family, how to protect them, how to grow some cash accumulation along the way. Those are going to be great consumers for this, or great clients. Affluent, obviously those with discretionary income, those who have maybe they're nearing retirement, maybe they're already at retirement, but they want to leave a legacy to their family. They also want to look at tax, just some different ways to build cash with some tax advantages. Transition boomers are those who are 5 to 10 years out from retirement. They are at their highest wage earning years. So these might be great individuals for our policy as well. And I will tell you, our target policy, or our target market really for our policy, or the most popular place is going to be anywhere between 35 and 55. That's really kind of our sweet spot for our policy, and overfunding or max funding the policy. So our average premium that we see coming in is about $17,000 per year, and roughly about a $500,000 death benefit. So just to give you a little bit more about our policy, issue ages are 0 to 80, and we have anywhere from 100,000 up to $65 million in death benefit. So just a little bit. Small business owners, these are also great customers for our client. Setting up, executive bonus type policies is one of our key targets in our market. And then also, just different ways for compensation and also retention is really important to small business owners as well. As you know, they might not have enough employees to really do a 401k or do some ERISA type plans. So an IUL is a great place for those clients to do that for them, for their business. Okay, when it comes to indexing and different bonuses, we want to try to make it a simple story, because we actually have several different index allocation options, several different bonus opportunities, but it's really as simple as this. You choose an index, you choose your bonus, and then you choose a crediting method. Here are the different index allocation options that we offer, and you can see we've got 5 different index allocations. That does kind of differentiate us a little bit. There's some carriers that don't have as many. They certainly don't have, the volatility control, the S&P, and our blended, or the futures index, or the blended index. So they have their own types of flavors of these, but this is what our mix is. Our fixed interest account is also available on each of the policies as well. Bonus opportunities. This is kind of a busy slide, but really I just wanted to point out we have 3 different bonus opportunities. We've got our classic bonus, which is a 1% guaranteed flat rate. No matter what the market does, the client could get a 1% credit, even if it's a negative market. We also have a 15% multiplier bonus and a 40% multiplier bonus that comes with a 1% asset charge. What I want to point out on this slide is that every single one of these bonuses and that 1% asset charge are guaranteed. So once a policy is in force, these are guaranteed. They can never change. So no surprises to the client there. We do also offer a standard no bonus opportunity, and that's only available with our S&P 500 allocation options. This is a look at all those different bonus opportunities, the crediting methods, and then the indexes as well. So we do have some marketing materials on this, and I'll make sure that I get John all the marketing materials on our product, and then also on these index allocation options, because I'm not going to spend too much time on those. I do want to get to our index lock. And before I go into index lock, John, are there any questions so far or any comments?
I've not seen anything yet.
Okay, wonderful. All right, so index lock is definitely unique in the IUL space. Allianz is the only carrier that offers this, both on our annuities and also on our life insurance business as well. So what the index lock is it allows the client to go into their policy anytime throughout the year and look at their different allocation options that they have. And there are 4 different allocation indexes that are lockable. And if they've chosen any of those as their allocation options, they're going to be able to look at the value anytime throughout the year. And they can say, hey, Allianz, I want to go ahead and lock in a value. So let's just say, it starts day 1, everything's at 0, right? It's level. So if one of their allocation options, let's say, 6 months into the year, it's at 10%. And you've illustrated them, or when you sold this policy, you illustrated it at 6.65, it's gotten to 10. They can either call you, tell you to lock it in, or they can go in manually and lock it in themselves. So it allows them to lock in a gain anytime throughout the year. Now, when they lock it in, it doesn't mean that that credit gets credited that day. It still gets credited on the anniversary. But what that's doing is it's giving them the peace of mind that it doesn't matter what happens. It doesn't matter if there's volatility in the market or if the market goes down, they've locked in that specific allocation option at their 10%. So that's essentially what it does. There are different features that go along with it. There's the auto lock. There's a manual lock. There is a way for them to set an upper target or a lower target. And this is just looking at an example. So this is just showing that an auto lock, currently the index interest rate on this particular example is 21.09%. Well, they can manually lock it right there and say, okay, I'm happy with that 21.09%. I'm going to lock that in, and they get the confirmation that it's completed on that day. The other thing that they can do is they can set an upper target, and they can say, you know what? Maybe not satisfied with that 21.09, I'm going to set an upper target of 24%. So if it ever gets to 24, we'll lock that in automatically. So they can set that up if they like. They can also do what's called a lower target or a lower threshold. So this example is showing them setting that at 19%, meaning if the market all of a sudden starts dropping, something major happens, in the world, and stock markets are addressing those changes, they can actually lock in at a lower target. Again, this could automatically happen. What I like is that a client doesn't have to necessarily set an upper target. They can leave that blank. They don't have to set that. They don't have to set a lower target either, but I like talking about the lower threshold and the lower target, because once a client has a positive gain in their index, let's say, again, this is 21.09, they can set that lower target, and as their index goes up in value, if it does go up, they can actually keep ratcheting up that lower target. So let's say they, a month later after this 21.09, now it's up to 23%. Well, they can actually lift that lower target up to 21, always leaving a little bit of room for flexibility, because you don't want one little blip in the market to lock it in. But I really like that lower target and lower threshold lock on the index lock feature. And I will tell you this, when I look at index lock reports, and I did just look at IAMS index lock report as well, there are very few upper targets set and almost no lower targets. So I think we just need to do a little bit more education and training on the lower target, because I think that could be really powerful, especially if there's a lot of volatility late in the year and they've already got a really, really good lock. So anyway, that's index lock. I'll stop there and see if there's any questions. I know I hit that pretty quick.
I'm not seeing any. Remind me, Krista, I know that we get those reports on a monthly basis. Does
Yeah.
that go out to the individual producer then also, correct?
Yeah, they do. So once you have a policy with us, you should get, I think it's a biweekly, so every couple of weeks, if there's any credit above 5 or 6%, I can't remember exactly what it is, you'll get an email from one of our external wholesalers, whoever's in your territory. You'll get an automated email telling you or giving you a list of your policies that are above 5 or 6%. So that gives you the opportunity to take a look and say, okay, well, these are at 5, these are at 6, these are at 8, 10, 12. And you have the ability of then calling out to your client if you so choose, just to remind them of this index lock opportunity. And who knows, maybe that opens up other opportunities for you as well. But yes, you will get an email. And then John, for you at IAMS, yes, I send out those monthly reports so that you have a heads up as well. So sometimes they might miss their emails, or maybe they've opted out of emails. So it's not a bad idea to give them a call, especially if you see some that are above 10%. I did just, like I said, I looked up IAMS report earlier, and currently there are 67 policies, or 67 index allocation options, I should say, because it might be multiple allocations on one policy, but there are 67 index allocation values above 10% right at this moment. So that's interesting, right? And you might want to take a look at your policies for those of you that said you did sell on an Allianz policy in the past.
So I do have one question here, Krista,
Sure.
that came in. Are agents permitted to change allocations per review, or does the client has to give you those permissions, right? That's a conversation you
They
have with
do.
the client for compliance reasons. And then also on the
Exactly.
lock feature also, right? You're supposed to call out to the client, say, hey, you're at 12%. Do you want to lock it? Do you want to put an upper target, lower target, all that kind of stuff? Those are conversations that need to be had.
That's exactly correct. So yeah, so if a policy is already in force and maybe it's been in force for a long time, you would have to just have them sign a form and then submit that to us to give you that permission. The other way is on an application now today, there is actually a little button that you can, or like a question that's asked on the application that says, yes, the client gives you permission to do these things for them and act on their behalf. So you can actually go online to the policies or all your policies, and you can look at their individual policy. And yes, you can change allocation options and initiate index locks or set upper or lower targets as well, as long as you have their permission.
Yep. One more question here, and I can answer this. Does the product offer a term rider? Which, yes, it does. Term rider.
We sure do. Yes, it's our supplemental term rider, and I'll show you on the illustration software here in just a bit where that supplemental term rider is. All right, moving on, just quickly, just want to talk about our loans. So, fixed loans, everyone has fixed interest loans. Just note that it costs 1% years 1 through 10. And then it's a 0% net wash loan starting in the year 11. It's the index loans that I want to talk about. So our index loan is guaranteed at a 5% loan rate for the life of the policy. So again, no surprises to your clients. So when you show an illustration, you're showing a loan rate of 5%. And if you're running an index loan, that will never change on the client, and it'll never be a surprise. So that is contractually locked in. And where it's flexible. So we offer a lot of ways to be flexible. Again, this is, that dynamic hedging, that daily sweep thing that we do that other carriers don't do, but it does provide some ability for flexibility on our loans that some other carriers might not be able to offer. First of all, you can switch between fixed and indexed loans throughout the life of the policy. We don't limit the amount of time amount of times that you can do that. They can do it as many times as they want. They are also able to blend their loan. So they can take, 25% of a fixed interest loan and 75% of an index loan. This is showing 50-50. They can certainly do that any given year as well. And the other thing that makes it extremely flexible is that, remember all those allocation options that I showed you with the different bonus opportunities? They can actually allocate their accumulation value to any of those 15 allocation options. They can also allocate their loans, their index loans, to any of those allocation options as well. So maybe they are more aggressive on their accumulation. Maybe those are in the 40% multiplier bonus. And then maybe they want to do the classic bonus or something else a little bit more conservative for their loan options. They can certainly do that. So just know that we're very flexible, not only on how they accumulate their dollars, but then how they can take money out. And that might be important, you know, down the road, 20 years from now, 30 years from now, whenever your clients are actually starting to access the cash out of the policy, just knowing that it's very flexible. And if indexes are not doing well, they can certainly flip that entire loan balance over to a fixed interest loan on any given year as well. So just want to talk about that. Living benefits, earlier I talked about protection focus that have maybe a little bit more, maybe you're seeing critical illness, long-term care riders, different things. What we have on our policy is a chronic illness accelerated benefit rider. So what helps make that a little bit more efficient in cash accumulation is they're not paying for that rider up front, and they're not paying for long-term care. They're not paying for the additional critical illness type riders up front. So the chronic illness accelerated benefit rider is attached to our policies. If a client needs to access the cash through chronic illness accelerated benefit down the road, then they would get the charge at that point. So they're not paying for it up front. It just helps the policy be a little bit more efficient. And both the terminal illness and chronic illness is up to a $1 million maximum for each of those benefits on our policy. All right. This is kind of the last slides I wanted to show you. So for wherever you are at in the country, we do have a territory wholesaler in your area that can cover your area, that can do face-to-face meetings, might do point of sale meetings with you. You might think about doing workshops or, you know, lunch and learns, whatever it might be. We've got somebody in your area that can help you out. So here's just a look at all of those. And John, I'll make sure I get you this wholesaling map as well, in case, you know, anybody would like to access this and talk with their territory wholesalers. So we've got our territory wholesalers, and then we've got their internal wholesalers as well. So the internal wholesalers are great for if you need a quick illustration or you need us to send out some product materials, you would contact those internal wholesalers. So that's it. I'm going to leave this screen up now as we kind of finish up. This is our microsite. If you have your phone, you can certainly take a picture of that. Otherwise, if you're on your computer, you just type in www.allianzlife.com/life sales tools. It has all of our most popular sales tools, product materials, digital sales tools, different things that you can use as you learn a little bit more about Allianz and our product, or want to get in front of clients with some materials as well. So that's a really great place to go. The one thing, or a couple things you will not find on that site is going to be illustration software and our underwriting guides. So you do need to be appointed with us and be able to access those on our website, on our secure website. That's it for the presentation part of it. So now I was wanting to get into our illustration software and then our EnSight proposal tool. So first of all, let me make sure I'm still logged in here. Okay, so everyone can see my screen, right? And I know many of you have worked with Allianz and have done some illustrations with us, obviously, as you prepare those for your clients. But what I really wanted to show you is how this EnSight tool works and how you get to it. I've already built out some EnSight proposals that I'm going to show you here in a minute. But first of all, I just wanted to show you our software and where you can access it. So over here, once you're on our software, over here on the left-hand side, you're going to see a number of things. You are going to see My EnSight Cases over here. This button you would access is how you access cases that you've already put out into EnSight. So any of the illustrations that you've already put into this illustration tool, that's where you'll find them. You can search for them there. But if you wanted to build your own proposal, and I'll show you what that looks like here in just a minute, but I'm just going to run through a quick illustration. think I've already done that. Let's see. So we're just going to do, just a regular supplemental retirement type of illustration. I'm going to solve for the minimum face. I'm going to have this increasing for 20 years. It's a 45-year-old male. So we're saying, pay until age 65 and then starting an income stream. Let's do 25,000, 1 through 20. And an income stream, 100% index loan starting years 21 through maturity. I will point out that the loan frequency I'm showing is annual. You can choose monthly. It gives a little bit higher income. And some carriers do default to monthly, some default to annual. I'm just going to keep it as annual to keep that simple. So once you've built out your illustration, chosen your allocation options, I'm just using the default illustrated allocations, which are our classic bonus, 25% into each of those. All 4 of these, I will point out, are lockable indexes. So again, they'd have that opportunity for index lock with any one of these here. And then let's just go ahead and get to the reports page. Once you get to the reports page, you're going to see the link to EnSight. And so that's, you can either print the illustration out if you want the full PDF, or you just simply link to EnSight. Once you link it to EnSight, it takes just a moment. So what it is it's putting it into the cloud, into this EnSight proposal tool. So really it's taking, 50 pages of an illustration, and it's putting it into this software, which is great. So I'm going to show you how to build it. So I've just ran that illustration. You can do a couple different things. For right now, I'm just going to say use a template. You will give this a name, which I've already done. This is just an example. And then you can choose many different templates. Now, I might have some more that you're not going to see, but you're going to see some of these, like a supplemental income, cost of waiting, stress test. There's a life insurance sales story available as well. So I'm just going to choose the supplemental and then open it. So I'll just quick show you how to build it, and then I'll show you a couple of the examples that I've already run for you, and then show you what it looks like to the client once you've set it up. So right now I've got this illustration put in. I'm not going to present it yet because there's a few things that I want to show you first. So first of all, here's your product table. You can toggle on and off these things. So if it's blue, that means it's on. And then you can certainly turn it off. So, personally, the product table is great to have if you've got multiple products. So this is what that looks like. And just an FYI, once you actually print this, or once you actually present this to the client, no matter what page they're looking at, they're always going to have a link to the full PDF of the illustration. So you're not hiding that illustration by any means. You're just presenting it in a different manner digitally. So here are some of the things that you can see on this report. So you can do things like, okay, this charts is going to show you each individual feature of the policy and what the numbers are, and they're going to be able to take these toggles and change these as well. But obviously annual income, $92,864, that's going to be the same if it's at 65 or 85. That's just the annual amount of income. Cumulative income, this is obviously, they start out, there's no income at all, and they can pull this out however long you want to show it. But here we go at age 85, they're showing an income of $1.8 million. You've got different other buttons here. I like to set these up and put the toggles to wherever you think you want to have them look at it when they get it. So maybe this you're putting at age 70. So you just go through these different things and set where the presentation is actually going to show the client. So maybe I just bring this to 65. All right, so there are different items. Another thing you can do is you can actually, on this setup page, you can move things into different order. This is actually, oh, sorry, hold on one second. See, I built many of these, so I'm just trying to figure out which one I'm looking at. Okay, so you can actually move things around, put them in different order if you'd like. And so let's just stick with this one. So the single view, this is, oh, now it's loading. Let me just go into one of them that I've already built. Makes it a little bit easier. Okay, so the single view is really a cool screen. So this is just giving them the most comprehensive look at their policy and the different values, the accumulation value, the death benefit, and how those are acting over the lifetime of their policies. Now, again, this is based on an illustration running at 6.65 and somebody putting in $25,000 a year for 20 years. So you can, show them that, hey, here you go. This is showing all of the different values within the policy. You get to age 65, you've got a non-guaranteed death benefit of 1.3 million. You've put in enough, you put in your $500,000 of premium, 25,000 for 20 years. And your net surrender value at age 65 is just over $1 million. Now you can continue scrolling out and just see the impact. And, if your client tells you that, hey, longevity in my family, or, my grandparents lived to be 92 or 90, whatever it might be, you can pull this all the way over to age 90 and then do the math for them, or they can see the math visually right in front of them, that they put in 500,000. They've managed to take out 2.3 million in tax-free income out of the policy via loans by age 90. And at that time, if they pass away at age 90, there's still 724,000 of a death benefit to pay out to their beneficiaries as well. So I think this is just a really powerful way of showing the policy. This is all within the illustration, but this is just, a visual way for them to look at it as well. So there's many different things. Again, the charts is a way to look at it, each feature individually. So I think this is good too. There is a retirement tax efficiency tab if you'd like to add that in. Again, you can turn that off if you want it to be more simple. But this is a way of showing that, hey, without the accumulator income, they've got an effective tax rate of 25%. But if they added in the income, and that's with their Social Security and their other retirement dollars coming out. But if they added in the accumulator IUL and they're getting this additional tax-free dollars, it's lowering their effective tax rate year after year. There's a way that if you wanted to, you could go into the assumption. So there's always going to be at the upper right-hand corner if you wanted to make changes to show what they were putting into their, their retirement accounts. What they might be doing differently here too. So this is just an example to show you what that screen is. The charges screen, I always love to, tell you to include this in your policy, because what is one of the main objections of a person buying a permanent life insurance policy? They say, you know what, it's just so expensive. Why not just buy term? Well, you can show them, you can ask them, what do you mean by expensive? Sure, the policy is expensive upfront, right? You've got high costs upfront because you haven't paid enough premium into the policy, and Allianz or the carrier is on the hook for a very large death benefit. So there are some charges upfront. But if you ask them down the road, especially if they've got other assets under management, you can ask them what are the management fees for those? Is it 1.5%? Is it 1%? And so what I like to do is I pull this over until it gets to about that 1% overall total charges. So it looks like this is about age 56 to 57. And if you pull it out even further, you can then, clarify to them that as this is a type of it's insurance, but as more cash value is building in the policy, the net amount at risk actually becomes lower. And so the charges actually go down as your policy ages. It's different with an asset, right? As accumulation, or as your assets grow, you're paying that 1% fee, you're paying an annual fee that's higher and higher. Whereas on the life insurance policy, the charges actually get lower as that accumulation value grows. And then the spreadsheet is just a quick look. So let me just show you quick what this looks like when you present it. So when you present this to the client, or once you email it to your client, this is what they're going to see. These are the things that exactly where I left the toggle at 85, but they're going to be able to take this and look at all these values as well and see the values change year after year as they move these out. So just gives them that ability to make those changes. Same with the charts page. They can look at all these different things that you have on this illustration and just look at the different values as they go. All of these things, every single page, what I mentioned is there is an illustration link on every single page. So if they wanted to look at their full PDF, they certainly can. Okay, so that gives you a look at what it looks like in presentation mode. So here is another, this is what's called the sales story. So let's say you wanted to just make it simple, and instead of sending out a brochure and all the PDFs that go along with explaining what the policy does, you might just go into EnSight, put the illustration in there, and instead of for the template, you choose a sales story. The sales story is basically all the different product material information put into this. So it's just put into a digital format where they can read about the policy, and it goes over index lock and the indices. How does that work? How can I get a gain? What's an example of an index lock? All the different riders that are available on their policy. And then they also get this policy summary, which gives them a quick snapshot. Again, you can see they've got the illustration here if they want the full illustration. This just gives them a snapshot of what you illustrated for them, and also has these little toggle buttons as well to look at different things. This is your policy building cash accumulation along with your death benefit. This little picture is about the loans and how the cash accumulation is growing, and then how the loans are coming out over time, how that accumulation plays into that. And then also here's the death benefit. So again, all the way up to age 99 for that death benefit amount as well. So this is just, something that you can have on. And again, then when you present it, this is the only thing that they're going to see is just that. They're not going to have all those different charts and different things. It's more about the marketing story and telling them about their actual policy and how it works. So you can certainly set that up as well. One other thing I want to show you quick is that you can actually run multiple illustrations, and you can put as many illustrations in here as you want, but this is a way to look at that, or to put multiple illustrations in. You can certainly do that. The charts is where I think that's the most powerful, to look at multiple illustrations. So again, you can pull these along side by side. What I did is I ran 25,000 for 20 years. That's the example we just ran together. And then I did another one saying, okay, well, what if I just want to pay a shorter period of time? I want to put in 50 over 10 years. You can also do, 100,000 over 5 years. It's the same amount of premium going in, but how they're getting there obviously is a little different. They're putting more money in. They might have higher death benefit amounts. They're going to get more cash accumulation. So you can really show them, the power of the policy, depending on how they fund it, what age they purchase it. Maybe you're talking to somebody right now and you want to show them this, and then they're like, well, maybe I'm not ready to buy it, maybe in a couple years. Well, you can run one, same illustration, same premium amount going in, but a person that's a couple years older. Another way that I've seen this used is for an illustration where somebody might have quoted at Preferred Plus, but they ended up getting a Table 6 rating. So you can put those side by side and still show the power of the policy, even though they got table rated. So that's another way, another opportunity to use this as well. The way that you would get this to your client's hands to get that presentation sent is you would just click on this little send button. You can either copy the link, copy and paste, or just hit copy here, and then throw that into an email it to your client with a quick, informative email, just saying, hey, here's the full illustration. If you'd like, you can certainly attach the PDF to that, or just mention that, hey, the link to the full PDF of the illustration is on every page of this interactive tool, but this is a way for you to see it and visualize how this product works, and all the different values that go along with the policy as well. So just a really powerful tool. And again, we have, out of 100% of our agents that are appointed with us, maybe 15 to 20% actually are using this tool. We pay for this. It's a free subscription to you. And we work with EnSight each and every year to bring different highlights and features to it as well. So just wanted to let you know how to get there through the illustration software, and then how to run it and present it to your clients. John, any comments, any questions? I know we're at an hour.
Yeah, the only question, and I had got it answered, it was pretty much the overloan protection rider that's available on the policy to avoid any potential issues, or lapses and tax consequences, all that kind of stuff. So got that answered. So I think that was, I'm going to launch one more poll here for the attendees here. So if anybody would like some, just a quick question here on better visualization tools to help you present to IULs, yes or no, right? Just heads up, everybody, so you're well aware. Somebody from our team will be reaching out to you here either this afternoon or tomorrow by the end of the day to get your feedback here. If you want any more additional information on Allianz themselves, their accumulation IUL product, or getting appointed with Allianz there to walk through those next steps. So appreciate the time from everybody. Thank you again, once again, Krista, for hopping on with us here. A lot of good information, powerful tools that you guys can use here when appointed with IAMS and then directly with Allianz. So with that, I will let everybody get back to their day. Hope you have a great start to the week. Happy 2026, and look forward to talking to everybody soon. Thank you.
Thank you. Bye-bye.